2020 has without a doubt been a crazy year. And with the elections right around the corner, with the coronavirus still at large, I think it's fair to say that we're not quite out of the woods yet. In this video, I want to share with you 3 tips that will help you invest better during this pandemic. What's going on, you guys, and welcome back to the channel. If you're new here, my name is Brandon from the Investing Academy. You can check us out at www.theinvestingacademy.ca. Today, we're going to be talking about 3 tips that are not only catered to beginner investors. I think this honestly goes for anybody out there in the stock market, but especially beginners, that will help you get through this pandemic better. And this is a video that, in all honesty, I should have posted probably a number of months ago when things just got crazy, but they are still very present today, especially, like I said, with the elections around the corner. We're getting closer and closer to this vaccine, and I'm starting to see a number of questions pop up. I've been asked questions personally. I've been starting to see some things online, and hopefully this video can just bring us back on track to focus on what's important and to kind of stay guided, stay on our pathway in terms of how we should be investing with all the chaos that we have in our world. If you enjoyed this video, by the way, guys, I really do appreciate it if you take a second to drop a like. That really helps. But let's dive on into these tips, and they're in no particular order. But the first tip that I think is a little counterintuitive, but a very good one, it's instead of chasing companies, instead of chasing stocks that you think you have a hunch that is gonna benefit from the pandemic, they're gonna surge from the pandemic, do the exact opposite. And that does sound very, very strange, as a very strange piece of advice, because it goes against everything that you would probably think. But the amount of times that I've been asked questions on, let's take, for example, the vaccine stocks. I actually had a very close friend of mine, someone like a high school friend of mine, asked me a good question, said, why not just take $25,000, let's call it, and split that amongst 5 different vaccine companies, 5 different biotech companies, the penny stocks, the ones that have their fingers in this vaccine play, and 4 of them may go bust, but the one that does hit is going to explode. Another thing that I've been getting, obviously one to think about is like masks, right? The masks and all this new demand for masks means that 3M is now all of a sudden a great company to buy. Thinking very, very short-sighted about what play can we make based on what's happening right now. And although I think that is a very smart thing to do, to be understanding what's going on, absorbing what's happening around us, I think what a better thing to do in this case is, rather than, let's call it cherry picking these stocks that are about to surge overnight, just fall back to the quality companies that we know. And what I think a lot of people lose sight of when you see these stock prices jolting up and down, you're seeing a lot of people making money very, very fast with electric vehicle stocks or vaccine stocks or whatever the case is. It's very easy to lose sight of the fact that beneath every stock, beneath every quote that you see, there's an underlying company that we're actually buying into. There's a company that we are investing in. And if you look at really any of these penny stocks, let's focus on the vaccine question for now, because a lot of them, there's a very high area of discussion as we are getting closer and closer. A lot of these biotech companies, a lot of these stocks that are trading under $5, if you look into their balance sheets, if you look at how the companies are doing, many of them are losing millions of dollars per quarter, hundreds of thousands, millions of dollars, so much money invested. There's so much anticipation and so much money that's being poured into these vaccine trials and developments and tests. Comparing that to something like, for example, if you looked at a quality company, if you went back to the boring old, Johnson & Johnson of the world, or even like a Pfizer, for example, or a Merck, companies that have this backing, the deep pockets, the financial resources that have been doing this for a number of years, you compare a company that's losing $1 million or multi-million dollars per quarter to one that's making billions and billions. And they have their hands not only in this vaccine, but in a number of other drugs, a number of other areas and medical devices and all sorts of diverse areas, let's call it, compared to just cherry picking or kind of mining or hoping for that one company that's going to hit it huge. Don't get me wrong, in the sense that there are going to be companies out there that really, really do benefit from this. There are going to be a select number of companies that, from this coronavirus, from the pandemic that we're going through, really make it out of here. They skyrocket because they do have their part in the cure, or whatever case we're talking about. There is those select few companies that do manage to play their part, but for every company that does super well, there are dozens, maybe even more than dozens, that do the exact opposite, and they do so poorly. And it's easy to get sucked into that, when really I think the takeaway from this is don't speculate. Don't try and pick these companies that could do well. You will probably learn the hard way, at least in my opinion. You hear story after story, time after time, someone heard about a specific tip, or they heard about a biotech company, or whether it be a mining company or oil company. When you're looking for these risky plays, the result is usually a poor result. Because let's not forget, we are going through a very crazy time in our world, an unprecedented time. And it's easy to forget the fact now that the market has picked back up and we're pushing all-time highs. I know it's been a little bit of a sell-off recently, but it's kind of easy to forget that things like unemployment are still through the roof. There are still a bunch of people here in Canada that are on government support, and people still have yet to get their jobs back. Maybe we haven't quite felt the impact of that yet, but if something does kind of crater in the economy, if something does crater in this world, stimulus stops being pumped out, whatever the case is, you want to have your money in quality companies that have deep pockets, companies that have been through previous recessions, and the history shows that they can get through whatever we go through now. Companies that maybe have strong pricing control, right? They're in an area that they're not going to get swamped out by competition. They're not going to get swamped out by a delay or a decrease in demand, I should say. You don't get that with these small companies. You don't get that with the companies that are going to surge and skyrocket through the pandemic. My tip number one, in a long way of saying that, is fall back on the quality. Although it may be boring, whenever we go through a tricky time, the weak are going to get demolished. They're going to get wiped out. And the strong companies, they survive. They often come out of these times even stronger because their competition gets demolished. They just get wiped out, or the strong companies make it through. That's tip number one. A little point I had here. This video is going to be a little bit crazy, by the way, if you haven't noticed already. A point, we'll call this point 1.1. It still kind of bases off that. It's also, don't get too persuaded by the political news in making your investment decisions. This is going to become more and more apparent as we creep closer and closer to election day, to the actual decision day. But questions are already starting to come up like, well, if Biden wins, these stocks are going to do well. Or if Trump wins, these stocks are going to do well. And of course, there are absolutely political impacts. There is going to be impacts depending on which party wins in our economy, in our world. But again, I think you're getting very short-sighted when you're trying to make these speculations, trying to make these plays, rather than looking back at a company and more or less picking a company that will do well regardless if Biden's the president, regardless if Trump's the president, a company that will do well 4 years from now, 8 years from now, regardless of what's going on. That's what we want to be leaning for, not getting so short-sighted and, well, what's going to happen here? What's going to happen this month? What's going to happen because this article was released, etc., etc. Moving along into tip number 2, and this is a tip that I think would honestly go at all points, but especially now, as I have seen a couple videos on it online. Let's just keep this one as kind of like a standard rule, one that I think we should all live by. Don't consider taking on leverage. Don't consider taking on debt to invest, especially during a time like now. And I've seen videos where, and no disrespect to anybody who's talked about one of these strategies or they're implementing this for themselves, it can work out for some, but for I'd say 99% of people out there, for 95% of people out there, default to just avoiding debt to invest. I know actually a percentage of people personally who have taken on loans, put that into, let's say, some dividend yielding stocks and saying, well, if I'm paying, X% on my loan, interest rates are low, I can make more of that through this dividend payment or through this interest that I'm earning, and kind of try to put this in somewhat of an arbitrage situation. That is a very, very risky thing to do at a time like this, where companies will inevitably over the next number of years go bankrupt. Companies will cut their dividends. It's so easy to think now that I can take on debt, I can multiply my earnings, I can really leverage up and really take advantage of what's going on in the market, especially again, because things have been going well since the recovery back in March, or since the market dropped off. I think what I'd say is to just simply avoid it. And I know that's not the best answer, but it's not always greener. It's not always the magic way to do it, to just take on debt and that's going to unlock a bunch of success for you. I think what it really does is come back to bite people in the butt. And I've never been in that situation myself because I think I can do fine investing within my own means, not extending myself. Again, there are certain periods of time where I think that could be the case, but especially right now, don't take on debt. If anything, if you have some extra cash, I would actually consider paying down debt. Pay down some of your debt if you can. Get rid of those debts, because one thing we can say is that when we do pay down debt, that is a guaranteed return. And especially with all of the money printing we're seeing down south, when there's an abundance of money out there. I know the Fed has been talking about, not expecting a whole bunch of inflation, but the reality is that is a counter effect. That is a result of having all this extra money floating around in the economy. So, which of course is would be a benefit, right? Don't have your currency devalue, just take that money and go pay down some debt. Worst thing I would say in this case is to take on debt. Rambly point 2, but let's move on to our third one to finish off this video. And I do really like this one. This is for especially a beginner, but really, again, anybody can fall into this trap. It's easy to forget this. I forget this all the time. And this is such a good way of staying grounded, is that if you're worried about investing right now, if you're either currently investing, if you're just getting started, let's say you have money, but you don't know whether now's a good time to invest or not, just understand that like anything else in the past, like any major event, like anything we can look back at history, this will pass. And by this, we could be referring to the coronavirus, we could be referring to the elections or the Trump presidency. There's really just, we are going through a crazy time with a lot going on, but there always is. And it's very easy to just fall into this scope and worry about what's happening this week or this month or this year for that matter, when in the big picture, when in the big scheme of things, they're just blips along the radar. And to kind of showcase this, I'll pop a chart up on the screen. I love looking at charts like this. There's a chart that says reasons to sell. And it takes, well, this is the S&P 500, I know for a fact, or the Dow, I should say. The S&P 500, sorry. And it just showcases a number of different events that would have been in the news, that would have been on the headlines, like a government shutdown or Ebola virus contagion fears back in 2014. Brexit is another one where in a single day, I think the markets were down 10%, 12%. That's that little blip here relative to how things have gone. You can even look as far as things like the trade war here or the yield curve inverting, which if you can recall back to really not that long ago, this seems like a number of months ago, but I guess a year ago now, late 2019, that's the talk of everything. And the markets are going down and the yield curve's inverting, and it's just there's so many reasons to panic. There's so many reasons where if you believed in whatever you're hearing and whatever's going on was so serious that it's not a good time to be in the market, I think that's the mistake there. And I hope that a chart like this is really a great inspiration to show you guys that things do happen and the markets do come down. And coronavirus, it's not showcased on this one, but we'd see a big sell-off in March or the early part of 2020. Stock market's coming down a bit now, but we should really just be looking at these as buying opportunities as a beginner, assuming you're in it for the long term. A strategy that I think anybody can really implement is that invest whatever dollar amount you're working with, keep a good portion of that in the markets, keep a good portion of that socked away, but have a little bit of cash on the side. Have some cash available for when opportunities come up. If there's another worldwide lockdown and cases start spiking up everywhere, or if the market just jolts down after the election results, or if Trump, kicks the can, there's a million things you could talk about. I think those should all be looked at as opportunities, and it kind of ties back to almost that first point that I talked about. If the stock market did come down, or even prior to the stock market coming down, we always want to be proactive as investors. I would just lean towards the quality companies. I'd almost strip out all these aggressive speculative picks during a crazy timeline now. Go back with what works, because again, these companies have proven to have done it. There's a much higher chance that they'll get through and survive whatever there is to come. To me, honestly, I would just take that as a chance. If the markets came down, buy more. As you see through all of these examples here, the market over time tends to appreciate. It doesn't tend to appreciate. A good index will appreciate. Good companies will appreciate. That's honestly the way that I would look at this. Obviously, another strategy regarding your cash and how you should play this, and not a major tip, is that if you are looking to get started with investing right now, I would not advise, well, I'm not giving any advice to begin with, but in general, if it were me, I would not take all of my money and put it into the markets at once. I would definitely section that off. I would definitely break it up, because whether you want to do it through a dollar cost averaging strategy where you're implementing money on a consistent basis, whether you maybe want to break it up into 2 or 3 big installments so that you can kind of ease your way into the market, when there's this much uncertainty going on, when there's this much ups and downs, there's this much volatility in our world, I would definitely take the safer route. I definitely play it safe. I just remember to always keep things in perspective. Always keep some cash aside, and remember that we are really in this narrow scope of what we will experience over our investing lives. So don't make any rash decisions based on what's going now. If anything, look for opportunities, but again, lean back towards those quality companies that you could see yourself owning for 5, 10, 15, 20 years out. That would be kind of my tips there, and that would kind of be the summary of hopefully everything we talked about, if we could all peel that into one big summary. These are, of course, just my opinions and my thoughts. I know the first one's a little bit controversial, and I'm completely fine with hearing your opinions on that, whether you guys agree with that or not. You can leave some down below, and if you did enjoy the tips, if you enjoyed the video in the first place, feel free to give this one a thumbs up, because that is a massive way of showing your support. If you are new to the stock market and you want courses and training, you want to become part of our Investing Academy community, you can visit our website. Well, actually, don't do that. Click the first link down in the description below, and that's how you can learn how to become a student in our academy. We can take you step by step through the entire process, help you develop a plan, help you understand the world of the stock market. And of course, if you're not already subscribed to this channel, I'd highly advise doing that, because we post videos like this every week. This was actually a video suggestion we got on Instagram, which I was gonna film another video, but this one got the bigger vote. So that's what we have today. I actually may still film that other video, just do 2 in 1, but thank you guys for watching. I hope you guys enjoyed, and I'll see you in the next video.